And welcome back to another episode of the House of Trade. My name is Justin Banton, and I'm joined by...
Safia.
Hey, nice to see you again, Safia. Now, today we are going to be talking all about the precious metal of silver, loved by some, hated by others, more of a young man's metal to the cousin of gold. Gold is more of an old man's metal. Silver is more of a young man's metal because you think about it logically, right? If you had like a lot of money, you're probably going to buy 1 bar of gold. If I had, Safia, 1 bar of gold, I'd have to probably have about 100 ounces of silver to represent the same amount of value in it. So I'd rather buy gold. But silver, nonetheless, is gold's more unpredictable and more volatile younger brother, I'd say, or even errant cousin. And today we're going to talk all about silver. I know you've been thinking about silver, so let's start it off.
Yeah, I have, because I feel that we've been quite hyper-focused on gold. So the conversation should go on to silver. And silver has actually outperformed gold. So why isn't that the trade?
Yeah, that's a good point. Why isn't silver the trade? Now, a lot of people don't appreciate silver's tradability in terms of allocating their capital to it. Most people who trade gold, they don't really trade gold per se, they buy gold to hold. So like you'll find people buying gold for investment purposes. You'll see people buying gold, especially in Asia, for weddings, or because they know it's a store of value. If you're in a country that experiences economic turmoil quite often, you know that your currency is less safe than invested in something that's been around for like 4,000 years, which is gold, right? So there are many different drivers about why gold is the main trade, and silver doesn't normally get those same flows and capital inflows because the narrative is a bit different. Silver is more of an industrial metal. It's used in dentistry, it's used in electronics, it's used in modern warfare. It's used in a variety of things that gold just isn't used in. So why isn't it actually the trade? Well, when you're looking at the volatility surface of these two assets, they behave very differently. When you're in these financial markets and you're a buyer long-term, an investor for a longer period of time, a capital allocator, or like me, a trader, you have to look at these characteristics of these assets. Gold is more of like an old man. It goes up in step fashions. It reacts violently sometimes, but over time it's trustable, it's trustworthy. It's not like a creepy old uncle, maybe what like silver is, right? Silver is more of a young man's game. Silver, the volatility of silver, we can have easily days where silver moves up 5 to 7% in a day, right? Now that represents a danger for people's accounts if they don't understand the volatility surface of the metal. So why isn't silver the trade? Well, normally when we're thinking about the precious metal complex, they normally move up in tandem, where gold starts off the move first. If we represent it in like a bull whip, have you ever seen one of those Spanish bull toro things, right? They have a
Yeah.
they don't have a whip, but they have a like a one of those things. I don't know what they're called, but anyway, imagine a bull whip. When you are whipping it, the base of it moves very slowly. But which part moves really quickly? Well, it's the end. We can think of the gold trade like that. The gold price moves first. It's the base of the whip, the first part of it. And then we have, as soon as gold has moved up like 10%, 20%, the end of the whip cracks really quickly. And that's the silver part. But what are the characteristics of that silver? If we're using the analogy of the whip, well, it's fast, it's violent, and it can hurt a lot. That's the place, that's where all of the kinetic energy comes from. And that's when you've been in the markets for a while, you start to realize that that's the volatility characteristic of silver. So that's probably why silver isn't the trade. Does that mean you shouldn't trade it? No, you should definitely trade it. But I would say if you are looking to allocate capital, remember that your position sizing should adjust to take into consideration the volatility surface of that. If gold's moving up on an average daily vol of like 1 to 2%, there's a strong possibility that silver is moving concomitantly 3 to 4%. Now you have to adjust for that. So that's probably why silver isn't the trade. However, that said, silver has been languishing in the doldrums for like a multi-decade period of time. And we've seen a really clean cup and handle pattern form on the weekly and monthly chart. Now, we know what happens at the end of a cup and handle pattern. The cup and handle forms, we get the handle, and then the move upwards is a measured move, which is the same value of the horizontal move, but in a vertical fashion. Now, we've seen that play out, but the interesting thing about the silver chart, and I'll try and put it to the side just up here, the interesting thing about the silver chart is that there's so much more of that vertical move to happen. It's happened in gold, but just like the bullwhip thesis, the gold has moved, but the silver is yet to catch up. Now, I would not be surprised if we see silver moving up to triple digits in like the next 5 to 10 years. Now, that's huge amount of outperformance. Now, you might say, hey, that's completely out of the realm of possibility because silver is now struggling at all-time resistance of $50 per ounce. But if all of the stars align, which maybe we'll talk about later on in this interview, then I don't see in the next 5 to 10 years any problem or hindrance with silver hitting those triple digits.
Okay, and I heard you mention earlier volatility, which is a big consideration in trading silver, and people can seriously get burnt in this market.
Yeah, people can get seriously burnt in this market. I mean, I remember trading silver when I was a young whippersnapper many years ago. The young whippersnapper many years ago. And yeah, silver can burn you. If you don't appreciate the volatility of silver, it can definitely burn you. It can make you a lot of money as well. It just depends on which side of that trade you are on. And quite often, there is no catalyst for silver. Gold is a multi-trillion-dollar market. The amount of flows in gold are of a magna or order of magnitude way higher than that of the daily flows into silver, which inherently means the silver complex is much less liquid than the gold complex. Is it a liquid? No, by no means whatsoever, but it's much less liquid than gold. There's also a lot less headline risk associated with silver. When I say headline risk, I mean what does silver actually trade on? Gold relates to like the state of the economy, the amount of debt circulating, the amount of fiscal incontinence and fiscal prudence, about how much money is being printed, about interest rates. But silver doesn't really relate to that one-to-one or as strongly correlated as gold does. So when you're trading silver, you might wake up one day and it's like up 6%. You're like, why? There's no news flow. There's no catalyst for it. But someone's pushed the price. Some big player in some markets pushed the price. Someone's hoarding silver. There's some esoteric piece of information that you have no idea for. It's the same way that you might wake up and silver's down 5%. So unless you're managing that volatility and you're managing that risk, you can easily get burnt in that silver market. But whatever goes down in a violent fashion or goes up in a violent fashion, it depends on the trader to make money either way. Because as a trader, we all know you can make money on the upside or on the downside. But the real money in this game, in my opinion, isn't made on those short intraday moves. It's in identifying, allocating to, and sticking with the long-term thesis and the long-term trend. That's where the real capital and the real money is made.
I do wonder though, is silver just an industrial play or is there more to the story?
Well, no, it's a good question. I mean, as we know, and as we've spoken about before, silver definitely does play a large part in industry in terms of like being a catalyst in dentistry, in certain industrial processes, in electronics, in modern warfare. So it definitely is way more of an industrial play. Like you don't see that the number one most conductive element in the world is not silver. It's gold. But there's a very good reason why our houses aren't filled with gold wiring, because it's too expensive. And it's not in circuits because it's too expensive. But silver, we can afford to do that, right? So yeah, it's an industrial play, but it's not just that. As gold has got ever more expensive, people are moving out onto the risk curve and they're moving out onto the procurement curve. So, hey, that Indian grandmother who wanted to buy gold for her daughter's wedding might not be buying that anymore. She might be buying platinum, or God forbid, she might be buying silver. Silver is now the next investment asset that is reachable and attainable for people who are trying to protect their wealth. $4,000 gold isn't as attainable as $50 silver is. It's still a precious metal. It's still valued all around the world. It's still seen as money good. I mean, it's not that long ago since people who are much older than me but still alive will remember that silver was once a currency. Silver was a monetary metal. You could go around and spend silver in the form of coins. You could take your dollar bill into a bank into America. You could take your pound note into a bank in the UK, and on the bottom of it, it said redeemable for X quantity of silver. It's a monetary asset. You could literally go in and they'd hand you the related weight in silver. So it's not just an industrial play. People are using it not only as a storage value, but also as a speculation play. It's much easier to get a huge, massive exposure to silver optionality than it is to gold optionality. And the upside, just like we're talking about the bullwhip effect, is much more. Gold moves, yeah, it moves pretty well. But silver is where the real alpha is made. Gold is up 50% this year, for example. Silver is up 65%. So we see it's not just an industrial play, it's also a speculative play.
Okay. And I've been hearing a few whispers about silver and national security, and it sounds very hush hush and mysterious. Is it?
Well, do you know what, Sabia? I don't want to say too much because who knows who's listening? Probably my 47 viewers, who knows? But there might be someone in the Pentagon. But all I know is that I remember a conversation, overhearing a conversation, and it was very hush hush. And they said, do you know what? In the American Tomahawk missile, there is about 25 ounces of silver in there. And that helps with the guidance system and also the scrambling technology that other anti-missile technology uses to shoot down those missiles. So you have to think about, okay, if I'm a United States military official, and I know that in a lot of my weaponry, there is a lot of silver, would you not think it was a logical play and a logical deduction to say, hey, this mineral is very important to me, right? It makes perfect sense for it to be deemed as a national security objective and a national security metal. People probably think, hey, we don't want China to get more than us, but no, it's actually used heavily in modern warfare. But I think, Safia, the less I say about that, the better.
I'm gonna ask for another interesting take because everyone hates giving forecasts for price, and I want to know if you're a bit braver.
Well, you know what? People do hate giving forecasts for price, but I don't really care because I don't think my 47 views on YouTube are really going to care about it. So I'm going to tell you, I think in about 5 to 10 years, silver is going to be trading at $150 per ounce. Now, what does that mean, Justin? Well, 150 take away 50 divided by 100, that implies a 200% move up in gold and silver from where we are now. Now, you might think, hey, that's completely ridiculous. But hey, there's crypto assets out here 10xing, 100xing, and they are not of national critical importance. They are not a monetary metal. They are not used in industrial complex and industrial processes. But silver is. And we already know there's a scarcity. There's an emerging scarcity. There's an emerging arms race on silver, which means there is a constant bid behind it. Now, another less mentioned catalyst behind the silver trade could also be the fact that gold is becoming very expensive and central banks all around the world are buying. Poland, China, Slovakia, they're all buying. Hardly anyone's selling silver or gold. What happens when gold gets too expensive? Well, we're going to move out onto the other precious metal complexes. We're going to start buying platinum, we're going to start buying palladium, and we're going to start buying silver. Not to mention the fact that I truly do believe we are heading into a more jingoistic and bellicose world, which basically means war is on the horizon. If war's on the horizon, we are going to all have to have strategic stockpiles of these minerals and metals. And when I say all, I don't mean like me and you. No one cares about our 47 views, but I'm talking about the militaries of the world, the governments of the world, where if war ever broke out, they'd need to have tons and tons and tons and tons of silver and other critical precious metals. So when you ask, am I a bit braver? I'm brave to give you a forecast, but I'm not brave to look at the world where silver is trading at $150 per ounce. I mean, I hope it never happens. But if it does happen and the times and the backdrop are a bit more suspicious and halcyonic, I hope to be on the right side of the trade. I mean, it's a once in a lifetime type of trade. Silver going to 150. It's been in the doldrums for the last 10 years. But we just know that when these cyclical moves start moving, they go for very long, the cycles become elongated, and people can make a lot of money. So I would definitely say, when we have central banks around the world buying precious metals, when we have JP Morgan, Citibank, Goldman Sachs all saying we should now start constructing portfolios with 20% of it being denominated in gold, that's a huge paradigm shift. Before, that was anathema, entirely antithetical for the investment world to start recommending precious metals be part of a strategic portfolio. Now they're saying you should have a bare minimum of 20 to 25%. Some are even saying 40% precious metals. Now, I understand they are incentivized to say that because they're on the desks that are allocating and benefiting intermediarily from these flows. I get that. But at the same time, it's a huge shift. So if you're interested in it, share, like, and subscribe. And hopefully me and Safia will talk more about silver and precious metals in the future. This has been Justin Banton for the House of Trade, joined by,
Safia.
and we will catch you on the next time. Ciao for now. Bye.